Hey guys, so as someone who works in finance, I wanted to make this video to talk a bit about assets and liabilities, explain what they are exactly and what they mean for you. Because maybe you're not sure what these mean, but you hear the words thrown around a lot. Maybe you've seen one definition, maybe you've seen another definition. So that's what I'm going to go into in today's video. So let's get right into it. All right, so in this video, I'm going to look at two particular definitions of assets and liabilities. And if we're to go by the standard accounting definition, then an asset is something that you own, specifically that has economic value. You know, it might be owned by an individual, a country, or a company, for example. So if we think about things like a home that you own, if you own a car, if you have jewelry, if you have, a phone, a camera, a laptop, these things can all be considered assets because they have economic value. That's to say that you could try and sell these items today, and in return, you would receive, some form of economic compensation, money, essentially. So a liability is something that is owed. So again, this can be an individual, it can be a company, or it can be a country as well. And the most common form of liability is debt. Now, typically financial debt, so whether it's a loan that you've took out, whether it's a mortgage, whether it's credit card debt, for example, these are all liabilities because they are amounts of money that are owed to another entity. And so in accounting terms, you've essentially got, a balance sheet with all of a company's assets on one side, for example, and all their liabilities on the other side as well. And you'll also see this when you think about, looking at someone's net worth. They'll have their assets in one column, and they'll have their liabilities in another column. And the difference between the two is essentially their net worth. Now, if you're interested in finding out what your net worth is, then you can go to my Etsy store and check out my net worth calculator that I built, and it's something that I myself use to track my net worth on an annual basis too. So all good up to now, but there is another way of looking at assets and liabilities that I've seen and is particularly shown on social media. And my understanding is this is inspired by Robert Kiyosaki from the book Rich Dad, Poor Dad. Now, when Robert Kiyosaki in his book talks about assets and liability, he refers to assets as resources that are cash flowing. That means they produce wealth, they create economic value for you. So this might be something like, a company that pays you a dividend. It might be a rental property that you collect rent from every month. And these things are all by, accounting definitions. They're also assets as well. But for Robert Kiyosaki's purposes, it's specifically assets that, generate wealth. They produce economic value for you. Whereas when it comes to liabilities, in addition to any debt you have, he also considers, let's call them unproductive assets to be liabilities. So for example, he would consider a car, perhaps a primary residence, like your own home. He would consider them as liabilities because in his eyes, as they're not producing cash flow, as they're not generating additional wealth, now with the exception of, primary residence here where houses normally go up, what Kiyosaki typically counts as liabilities are, traditional liabilities by the accounting definition and depreciating assets. That means that assets that lose value over time, like a car, like a phone or a laptop, for example. So we got two completely different definitions here. So which is the correct one to use? Now, in my opinion, this is what I'm going to give now, my opinion. I believe the correct definition is the accounting definition because, I can own a home, I could own a car, I've got a phone, a laptop, a camera, etc., etc. These items aren't completely worthless, If I were to sell them, I could go on the internet and I could sell a car, I could sell the laptop, and I would get some money for it. So in that sense, you can see, these things have economic value, and were I to sell them today, I'd get some money for them. And, for the purposes of my net worth statement that I mentioned earlier, and when I'm tracking my net worth, I follow the accounting definitions because these things have economic value, and based on accounting definitions is how I personally, and how I think most people as well, would measure their net worth. However, I do really like the way that Robert Kiyosaki looks at things. I like the way he looks at things because it's contrary to what we see in society every day. Societal standards have typically said that, if you have a big house, a nice car, and you have nice things, then you're successful. Whereas Robert Kiyosaki, if you've read the book Rich Dad, Poor Dad, you'll see that he saw two different mindsets, two ways of looking at finance. And it was essentially Rich Dad's perspectives that stuck with him. And these things that Robert Kiyosaki considers as liabilities, so the depreciating assets, he says that he would only buy them with cash generated from his income producing assets. So his stocks, so his rental property, for example. He wouldn't buy, a nice car until he was able to pay for it with his, passive income or income generated from his cash flowing assets. And that's one of the key lessons from the book, is having these cash producing assets, diversifying your income to be able to have some sort of financial freedom and not be stuck in the system, as he calls it, as a lot of people refer to it as. And that's something that I believe in and I advocate for as well, financial independence and financial freedom. It's what a lot of the content on this channel is focused around and inspired by. And so to take this video in a different direction to finish off, so I believe there is a correct definition of assets and liabilities, which is the accounting definition. But at the same time, I think there's a bigger question, and that is, which is the philosophy of assets and liabilities that you should apply? Accumulating depreciating assets, or accumulating, wealth through investing, through property, etc., and then being able to generate your own financial freedom. And the latter, I believe, is the correct philosophy to have. So guys, I hope you enjoyed this video. Leave a comment and let me know, what are your thoughts on this matter? And do you agree with Robert Kiyosaki's philosophy? Till next time, I'll see you on the next one, and let's get this money.